Welcome back to the Dividend Stacker Investing channel. Today we want to talk about my top 3 mistakes I've made as an investor. So my first mistake, I got to give you guys this quote. More money has been lost reaching for yield than at the point of a gun, by Raymond DeVoe Jr. So around 2019, I was looking for a high yield stock and I came across Cedar Fair, ticker symbol FUN. They are paying a 7 to 8% distribution, basically a dividend, and the stock was about $50. I was like, dang, 8% yield. So if the stock goes up at all, I'm going to be able to probably beat the market. But that was a huge mistake. When the 2020 COVID crash came, the stock fell from 50 down to $14. And of course, they cut the dividend, and I had to sell for a huge loss. I ended up making the money back, but it's still something I should have been more aware of, that some things are too good to be true. Number 2, getting greedy on covered calls. When the Russia invasion on Ukraine happened, I saw all the stocks drop real crazy, and I sold some covered calls on Tesla for the next day because it was like on a Thursday. Made like $1,000, maybe $2,000 on the option premium, because I was like, no way this stock is gonna go back up in the next day or two. And of course, right after that big dip, the stock just shot up. All stocks shot up, and I lost some Tesla shares for about $1,000. Number 3 is selling my winners and not just holding on to them. Around 2018, I was buying Apple for about $180 a share before the split. But there was so much FUD, so much misinformation from Wall Street on CNBC talking about Apple's not going to sell any iPhones, that they're done, all the growth is over. Their PE ratio was too high at like a 15 forward PE. And of course, I was like, oh man, I don't want to lose this money I made on Apple stock. So I sold Apple and I put it in a safer dividend stock, I thought at the time, to get some more yield. I think it was Southern Company. Had like a 4% dividend yield. But if I would have held Apple this whole time, I would have tripled, quadrupled up my money. But these are just some mistakes we learn as we go through our investing journey. And the bonus tip I got is focusing too much on dividend stocks. When I first started investing, all I wanted to do was get dividend stocks because that quarterly check just seemed too good to pass up. But you're giving up your growth when you get dividend stocks, because dividend stocks don't grow as fast as growth stocks. So I was getting like 14-15% a year in the beginning and getting a dividend, and I was happy. Getting $200-$300 dividends every few months. And then I found a growth stock, Tesla, and it doubled, tripled in a few months. And I was like, oh man, I've been doing this all wrong. I can double my money instead of just getting a 2 to 3% yield on my money. And that changes the way I invested from there on out. Look, even the name of my channel is the Dividend Stacker Investing channel, but I'm mostly in growth stocks. I don't even have any dividend stocks right now. But dividends are great for when you're getting a little older, closer to retirement, or if you just want to live off your portfolio. But if you're young, you should be focusing on growth stocks. Well, thanks for watching, and I'll catch you next time on the Dividend Stacker Investing channel.